now we're going to focus on which Robinhood alternatives are out there that we would personally possibly recommend or have used. And there's definitely a good amount. There's some kind of the older brokerages, basically, is how I'd break it down, who offer, a little more stability and have the what is it? Like, they've done it for so long.
Yeah.
Reliability, that's the word.
Yeah, they have reliability. They have a history of making trades.
Yeah.
They know how it's done. It's comply.
Not quite as flashy, the interfaces.
Yeah, that's actually what perplexes me the most, is that with some of the older companies, so for example, we just have Schwab and Fidelity on here as, good alternatives to consider. I personally use Fidelity.
I use Schwab.
And
hi, I'm a Mac. I'm a PC.
What I found is like their app is kind of old, outdated. It's kind of slow and chunky. What Robinhood has going for it is their UI is smooth, it's fast, it's fluid, it's easy and intuitive to buy and sell stocks.
But actually, flipping, a lot of people argue Robinhood is too intuitive and actually gamifies it too much.
So you don't realize it's like how the implications.
They make money off you trading, so it's in their incentive to get you to trade more. So it's like, they add the little haptic feedback when you complete a trade, or the confetti when you sell, and basically everything is geared towards getting you on the app more. They're
buy more, sell more.
They're a Silicon Valley company, so like their model is user time, how much time on app, how much trades, right? That's all they care about. They're not really caring a lot about. I mean, they're starting to like pretend that they do, but really all they care about, is how much time you're spending on the app, how many trades you're making, how much money they're making from you.
Yeah, well, I mean, either way, I still think that, maybe Robinhood's gone too far. It's almost too easy, but I still think it's more challenging on Fidelity, at least for my use, to execute the trade. It takes me way more clicks online. Yeah, the app experience is just not super mobile optimized. It feels kind of slow and sluggish. So while I would say Fidelity, great features, great experience, but the app design itself, I think, could be better.
Yeah, so starting with the older brokerages, if we were going to recommend two, it would be definitely Fidelity and Schwab, because both of those do offer still fractional shares. They offer like stock slices, I think what Schwab calls them. I don't know what does Fidelity call them, just fractional shares.
I think slices sounds good to me.
Okay. Well, I mean, because that's literally what Schwab, they call them stock slices.
Oh,
so
okay.
I don't know if
I don't know if Fidelity
they might call them something different. But yeah, basically they're identical other than that. As far as like fees, obviously no fees pretty much on everything except for like mutual funds.
That's an important thing to clarify too. So what Robinhood did is they made commission-free trading, and all that means is before, when you wanted to execute a trade, you would pay Fidelity or Schwab a commission. Typically, Fidelity was like $5 to execute that trade. And the problem is if you wanted to do a lot of buying and selling, like, all right, I'm going to buy $100 worth of whatever company, you would pay $5 on that, which is a terrible investment. Like, you're already losing 5% just on paying to execute the trade.
You had to be a lot more planned and like think out your trades.
Typically bigger trades, higher volume, things like that. And so now, thanks to Robinhood, actually all of these companies are doing commission-free trading. So
yeah, there's not really many companies that are still charging for commissions. It's only like if you're buying mutual funds, bonds sometimes, or certain maybe options, they'll charge you a little. But yeah, so those are the two. I mean, there's also E-Trade and Ameritrade out there, but personally, I looked at all the research. We've used these two, and I've talked to a lot of people. These are really the two, if you want to go old school brokerages. Now, the new school area, there's a couple different ones. There's Public, which I personally am a big fan of. There's Webull, which pretty much anyone who's on YouTube recommending is a fan of, because they actually give a very high commissions for affiliates.
Yeah, they have good affiliate payout. That's why everyone
recommends them. And then the other one I'd probably lump in here is SoFi. Now, all of these offer... Actually, no, Webull doesn't. Public and SoFi both offer fractional shares. Webull, interestingly, does not do that, which I'm not really sure why, but they do offer a lot more complicated ability to do, like, more complicated trades, like limit orders, market op... like
It's almost like you
more
take
in-depth.
The depth of the old institutions...
Yep.
And you add a new user interface to it, so it's a little bit more intuitive, a little bit more mobile friendly, but you're still getting a wealth of information at your fingertips. It's almost overwhelming, actually. I don't use Webull that much because it's just so there's so much going on in the screen.
It's definitely more like little higher levels. Like if you really want to get into it and really want to trade stocks, so it's not for everyone. And like I said, a lot of YouTubers are recommending it for nearly everyone because they get huge affiliate payouts. I
would say, Webull's like, or the other apps are like Public. It's like if you're dipping your toes in, Webull's like your knee to waist deep in stocks.
You're ready to go fully headfirst in.
Yeah.
And I just want to warn anyone about also everything we're saying here is purely just for entertainment purposes. Of course, hopefully you're entertained. because you can't take any of this as actual financial advice. So I would, though, recommend for entertainment purposes Public and SoFi personally. Of the two, Public I think is a really up and coming one. It's growing.
Yeah, I like them too. What makes Public unique?
It's kind of a combination of social media and of trading platform.
Does that make sense? Like, how does that work?
So I definitely there's a bit of hesitation because social media is oftentimes filled with people just pumping up stocks that they own. But if you sort through that and can kind of get a filter for, if I see someone just like talking about this one stock constantly in the feed, obviously like they have an incentive. But there are some good posts in there sprinkled in, and they do a good job of filtering them towards the top of like, hey, it's the first day. When Biden was elected, for example, I saw a post that was like, hey, it's the first day of this presidency. 4 years ago when Trump was elected, here's what the Dow was at, here's what gas was at, and it kind of compared it, and that was a cool comparison. Or like people will post like, hey, earnings week coming up this week. Here's what to watch for earnings, or just kind of useful stuff so you don't have to dive in fully on financial Twitter or on Google Alerts or whatever. You can just use this all in one app to both monitor what's kind of going on financially, as well as purchase fractional shares and do stuff like that.
Yeah, it's what people are saying about what their investment philosophy is, what they personally think.
Yeah.
So you kind of have to filter everything that's said, like, all right, this is what this particular person thinks. Here's maybe a historical trend of how they believe the market works or something like that.
Yep.
So you have to definitely sort of question everything, but it can be helpful to like see different people's perspectives and opinions. And I think the app design is super clean. It's super nice. And yeah, I really like Public as well. And I actually may consider switching to them. But what Robinhood has was the recurring investments, which is just a big feature for me personally.
Public still lacks some of the features Robinhood has. By the way, I'm going to put links down below in the description somehow for all of these probably, because they do offer affiliate links. And hey, we'd love to give you.
Yeah, we'd
love to give you both free shares, as well as we also would be nice to get some free shares or whatever if you do sign up, or if you have a friend also. That's probably a more sociable way to do it. Ask your friend for an affiliate code and sign up through their link.
Yeah.
But yeah, I think Public probably would be my number one recommendation for more beginners and stuff, because it's very similar to Robinhood, but it's more sociable, more about education, I feel like. And it also, I like that it has ability, say you buy Beyond Meat, and say you buy GameStop, and then you also buy Apple or a couple other ones, you could put GameStop maybe in your short-term investing. So it has an ability to actually sort them by what's your, all right, Apple, I'm going to buy that one and hold. So you pop that one down your long-term, and you're able to just ignore that kind of sort of thing and just invest money in that rather than looking at trading it. Whereas GameStop, you're like, I don't know.
Yeah. Oh man, this hour, next hour, next 5 minutes.
So that's why I like that.
I will say, Public, actually, I just discovered they had a PDF starter guide and gives you like a quick walkthrough of what a stock is, what it means to buy a stock. So I think if you're just getting into stocks, I think Public a really great option, a great platform to sort of dip your toes in and get started.
Yeah, and the other one now, SoFi, I don't think you have any experience with them.
I don't, yeah. Can you tell me, what is SoFi doing? What kind of makes them unique?
SoFi is almost, they're very unique and different from all these, almost more like a Schwab or Fidelity, because they want to be your go-to for everything.
Okay, what does everything mean?
So everything means you can bank with them. You can have your banking, your checking account, I think savings account. You can do even student loans and house loans through them. You can do buying of cryptocurrencies. You can buy shares. You can open an IRA retirement account.
Oh, snap. So this is like a fully fledged financial institution. Like this is a modern day Fidelity or Schwab.
I mean, I don't know what SoFi actually stands for. Do we know? Can we look that up? But it's like, probably has to be something financials. SoFi, no,
it just doesn't.
Maybe it's just social finance Inc. That's what it is.
Oh,
so it's more. I think social. I don't really know why that is. Maybe just because it's new, techie.
Maybe
Silicon
they're trying
Valley.
To be like more people focused or whatever.
Maybe that could be. I'm not really sure why it is, but I mean, this company's big enough that they have a stadium. I think it's in L.A. named after them, SoFi Park.
That's crazy.
Stadium, whatever it is. So yeah, they're a very big, very well established company. Their stock. Now we're just going to focus on mainly the stock thing, stock exchange trading area. It's not as good as Robinhood or Public or even Webull and Schwab.
Ooh.
Like, just in the sense that, all right, so they do offer fractional shares.
Okay.
But if you purchase fractional shares, those actually don't settle until the end of the day. So if you want to buy at a current price, like if you see a dip in the middle of the day and you're like, I want to buy and I want it, like, it's not really as much for trading, because buying a fractional share, you might not, the stock could go up, could go down by the time you actually buy it. So not really locked in. And if you're buying, full share, fine, that's cool. They also don't offer anything like reoccurring investments, really. Actually, wait. I think they actually might. No, they don't. No, they only offer the ability to transfer it into your trading account.
Oh, like a recurring deposit into your account.
Yeah, not investment. So you still don't get that. But I think if you're looking for kind of, hey, I want online banking, I want the ability to like deposit your paycheck there. Like
everything all in one spot, super easy.
Yeah, if you don't want to have 50 different accounts for different things like I have, SoFi might be a very good option. Like I said, you can even buy cryptocurrencies in there. And they offer some really cool ETFs and like kind of sortings of like, here's your growth stocks, here's your marijuana stocks, here's tech stocks, right? And their ETFs they offer one that's called, I think it's SYFY, I don't know, something like that. And it tracks their 50 most held stocks on their platform. So, right now it's like Tesla, Apple, and stuff like that. So you can kind of
GameStop all of a sudden.
Yeah, you can. No, it's not, because they only rebalance every month.
Okay.
So it's kind of, you can get on the most popular stocks, and which will likely be the ones that go up. And they also have one called TGIF, which is definitely a little more risky because it is kind of more junk bonds. But basically, it gives you actually every Friday, it gives you an interest payment.
Okay,
so that's kind of cool. So yeah, SoFi is definitely more all-in-one thing. Let's head to the final area I have down here, which is M1 Finance and WealthFront.
So this is different from the Apple M1 chip.
Yes, yeah. This isn't Apple jumping into the
finance. Well, they do have Apple cards, so it's not out of the question entirely.
They are kind of in there. So basically, WealthFront is fully a robo-advisor. You really don't at all choose your stocks. M1 Finance, I actually haven't used, but I've gotten close to using it several times. And why I haven't is because it kind of sits in this weird ground in between like fully fledged trading platform like Robinhood, like SoFi, like Webull, and WealthFront and Betterment and these robo-advisors, where you, instead of investing and picking your stocks and just, I want to buy this, I want to buy that, you actually kind of they call them pies, because you're able to go, I want to make, my investment pie will be Apple, this, and then you just drop money in and it's able to put money into those stocks.
Oh, so that's kind of a nice approach where you can say, all right, I want 60% Apple, 40% Tesla.
I don't know if it's exactly like that, but
you
can kind of
auto distribute it.
You can kind of do something like that.
Okay.
And it has pre-made pies too, so that you
I'm
can.
getting hungry now.
You can like, all right, I want to do S&P 500 but low risk maybe, and I don't
sure
like, or if it's long-term investing, you're like, yeah, I can set higher risk, more into stocks, and they'll have a pre-made like allocation essentially for where you'll go. The weird thing there is like you have to go over $25 for it to invest, even with dividends. Like they don't auto dividend.
So it just kind of accumulates until you get $25.
Yeah, which is kind of, I guess, like what WealthFront does too, where you have to go over a certain amount before it will invest it in. And so, yeah, this is definitely more. Both of these are more on the robo-advisors. But if you're the type of person that doesn't care about buying just GameStop and is more like, I just want to invest money, then this is the place to take money.
So what did you not like about M1 Finance?
It was just, I don't know. It felt like you'd either want to go with WealthFront, which was better at offering you easy to invest money, or you'd want to go more with the trading.
Okay, so this is like a weird in between.
The
pie system is just like a weird in between thing.
Yeah, I mean, for some people, hey, it might work, but for me, that was personally why I haven't, really recommended them.
I understand that. I actually really like WealthFront. I mean, to me, I feel like some people don't save, and if you can do 80% of the work, like all you need to do is deposit money in WealthFront. It will automatically distribute it for you based on when you want to retire, and it gives you helpful tools like how much you're saving each month, how your money is growing.
Are you using it for your IRA, or what are you using?
So I'm using my IRAs in Fidelity because
the retire thing isn't really. It's more like if you say you have.
You can set a goal or a savings goal.
So say you're like, I want to buy a house in 10 years, or I want to buy a boat in 5 years, or a car, or whatever, some big thing.
I want to buy Sony's new Xperia Pro smartphone.
I want to buy the new I want to save up for the new PlayStation 6 when it comes out in 8 years. So start saving now. $5 every 6 months, I think, would be good, and you should be there in time. And it would basically, it would take that money, it would figure out, all right, so we got 8 years, so we can go a little higher risk and start tapering down that risk as we get closer.
Yeah, so it does, like, in the beginning, it'll allocate more of your assets towards stocks, which are typically higher risk but have a higher potential to go up. And then as you approach the date that you want to have your savings, it'll be reallocating the assets into more stable and less risky investments, typically bonds and things like that.
Now, the one thing I really like about WealthFront also is they added this autopilot feature, and they have a checking account built in that you can use. So I personally, how I used it is I have a checking account with them. As I have too many accounts, as we've mentioned. I have a checking account in the same WealthFront account that I have my investing account with them for. And basically, I can set a threshold for, say, I want an emergency fund of $1,000 there, right? I can keep that in cash always in my checking account, and that's kind of out of sight, out of mind, just is $1,000 always. And I can set auto deposits into that, and anytime that goes over $1,000, it will then invest that money in actually the investment portfolio side.
That's kind of
I think they call it a cash account, and then it's an invest account or something like that.
I could potentially see that, like, if you're earning X amount and you need a certain amount for monthly expenses, like you say, all right, I need this amount to handle all my monthly expenses, but anytime money goes in and you go over that threshold, like to automatically save it. So it kind of gives you like a safe buffer zone.
Yeah, exactly. That's what it is. It's like, because you can always pull money out of your investment account, but anytime you do, you're going to pay short-term capital gains taxes, which are higher than long-term. So you basically want to, anything you're putting into that invest account, you're hoping is going to be there longer than a year.
Yeah.
Which I guess as you grow that account will be easier, because there will always be some money in there that's been longer than a year. So if you pull out $1,000, it will actually smartly sell the stuff that's been there longer. So you only pay long-term capital gains. But we're getting way off track.
Too much in the weeds.
Basically, those were our recommendations. Like we said,
five recs.
Yeah, Schwab Fidelity, Public, and SoFi more for the beginners. Webull for the advanced traders, and then if you really want the more robo-advisor type stuff, M1 Finance and WealthFront.